typical case will help you and I to understand the concept of value better. So now let's discuss a really interesting mini case. And that mini case is about Amazon. You might be surprised to know that Amazon management and owners are not very interested in shareholder value. When I say this, I mean that Amazon management, at least in the traditional sense of value as practiced by most other companies, is not following that shareholder value rule. And the reason Amazon are not that interested in shareholder value is because Jeff Bezos, the founder of Amazon, who by the way has an estimated net worth of something like $66.5 billion and is the third richest person in the world. Well, Jeff's high net worth is a result of the fact that Jeff, along with all Amazon management, are not that interested in shareholder value. And they're not interested because they understood that the meaning of real value in a business is not just about shareholder value. Well, when making this controversial statement, we mean that Jeff and his team at Amazon are much more, if not totally, focused on cash flow. And as a matter of fact, at least in the immediate future, Amazon are unlikely to begin focusing on shareholder value, as many other companies do. So now you might be wondering, why is that? Why is Amazon not focused on shareholder value, unlike most other companies? And why are they focused on cash flow? Well, to understand this important cash flow philosophy at Amazon, we need to go back into the history of Amazon a little bit. That will enlighten us to this concept. Since May 15th, 1997, which was the day when Amazon first went public, or in other words, the day the company was listed on the stock market, well, ever since that day, investors have in fact complained about Amazon's unprofitable business performance. In fact, many people thought that the Amazon business model was broken. But despite the fact that some observers thought that the Amazon business model was broken, Jeff and the team of managers at Amazon still continued to grow revenues every year, and they have done so every year since Amazon went public. But Amazon still never made a profit, till fairly recently they made a small profit. So now you might be wondering, what was the Amazon secret? Or what allowed Amazon to grow rapidly but not make profit? And what was it that had upset the shareholders so much over the years, but still allowed Amazon to experience very rapid growth? Well, that's an excellent question to ask. The Amazon secret was that Jeff and his team focused on growing revenue rapidly and reinvesting all the profits that they generated from the business into new business development. And by deciding on that unpopular action, Amazon in fact created more revenue, and that growth in revenue allowed Amazon to continue their rapid growth trajectory. And the main point in this Amazon story is that Amazon is a growth machine and continues to grow, has also allowed Amazon to offer lower prices, that growth, because they got bigger and bigger and bigger. And what this means is that Amazon also created a great deal of customer loyalty in the marketplace, and that high level of customer loyalty has also helped power their rapid growth. So profits, in fact, at Amazon are a secondary concern for management. And this is because revenues and the resulting cash flow is their primary concern. The secret which Amazon management understood better than most other companies was that increasing profitability will in fact slow down the growth of Amazon. Increasing profitability will slow down the growth of Amazon. Now think about that statement for a moment. It's very important in the context of our discussion today. Increasing profitability will in fact slow down the growth. That statement is in fact totally opposite to the neoclassical economic principles we discussed in the economics bootcamp session. Because in the words of neoclassical economists, the goal of every company should be profit maximization. Well, for Amazon, the primary goal has been continuous growth, and that growth needs to be as rapid as possible. And as a matter of fact, one of the secrets to that growth is the management of cash flow. So now you might be wondering, what does cash flow look like at a company like Amazon? And that's a good question also. Well, here's a snapshot of the cash flow situation at Amazon. Operating cash flow was at a level of almost $9 billion in 2015. And that operating cash flow level has been growing exponentially. Free cash flow at Amazon is some $4.4 billion and has been very healthy over a period of time. But as a result of this, net income has been very disappointing for the marketplace. Now let's take a peek into how the cash flow machine works at Amazon, because that's really important to understand in this case. First is the matter of net income. Amazon calculates net income in the following way. When Amazon sells a book, for example, online to a customer in their marketplace, the money received from the buyer and the money paid out to the publisher or the supplier of the book are recorded on the books at the same time. This is done despite the fact that in reality, the payment to the publisher doesn't happen at the same time as Amazon receives payment from the buyers online. And this gap is very important to the Amazon cash flow machine. Free cash flow at Amazon, on the other hand, is calculated when money actually changes hands. And what this means is that when a customer pays Amazon quickly, and if Amazon managed their inventory well, they will take time in paying the publisher or the supplier of the product they've sold to the customer. And as a result of this, free cash flow in Amazon creates a cash flow management machine. Amazon's free cash flow is positive and very healthy, even when their net income is not.